Based on the historical data and forecast, Bitcoin has shown volatility, fluctuating between a support price of $104,500 and a resistance price of $110,200. The RSI indicates that the asset is currently in a neutral range, with values oscillating around 50, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the middle band, with the upper band trending upwards, indicating a potential for bullish momentum in the short term. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to capitalize on potential upward movements. My strategy involves a phased approach. First, initiate a long position at $105,400, coinciding with the beginning of the forecast period. Set a stop-loss order at $104,500, just below the established support level, to mitigate potential losses. The initial target price is set at $107,400, aligning with the forecast price for June 29, 2025. If the price reaches this target, consider taking partial profits and trailing the stop-loss upwards to protect gains. If the price continues to rise, a second target can be set at $109,200, corresponding to the forecast price for June 30, 2025. This combined strategy leverages both technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum has shown considerable volatility with a recent downtrend. The RSI consistently dipped below 50, indicating a weakening momentum, and reached as low as 33.4, signaling an oversold condition. The Bollinger Bands show that the price has been trading near the lower band, reinforcing the bearish sentiment. Considering the forecast, Ethereum is expected to continue its downward trajectory, albeit at a slower pace. Therefore, I recommend a short selling strategy. We will implement a three-pronged strategy to maximize returns while managing risk. First, initiate a short position at $2,430. Place a stop-loss order at $2,310, just above the lower Bollinger Band, to protect against unexpected upward spikes. Set a profit target at $2,250, aligning with the forecast price and providing a reasonable return. Second, if the price rebounds and reaches the RSI level of 80, close the position. Third, if the RSI falls below 20, cover the short position. This portfolio combines technical indicators and price forecasts for efficient risk management and high returns. Based on the historical data and forecast, XRP shows a downtrend. The price has been fluctuating within a range bounded by support at $2.14 and resistance at $2.23. The RSI has consistently dipped below 50, indicating weakening momentum, and has recently entered oversold territory with values below 35. The Bollinger Bands show the price nearing the lower band, suggesting potential for a short-term bounce, but the overall trend remains bearish. Therefore, I recommend a short-term contrarian strategy combined with trend confirmation. We will implement a three-pronged approach. First, a short position at $2.1 with a stop-loss at $2.2 and a target price of $1.9, capitalizing on the downward trend and RSI oversold conditions. Second, a long position at $2.05 with a stop-loss at $2.03 and a target price of $2.15, exploiting potential bounces from the lower Bollinger Band and support level. Finally, a short position at $2.15 with a stop-loss at $2.17 and a target price of $2.05, confirming the downtrend if the price breaks above the resistance. We will allocate 40% of the portfolio to the short position at $2.1, 30% to the long position at $2.05, and 30% to the short position at $2.15, creating a diversified portfolio that balances risk and reward. Based on the historical data and forecast, BNB has been experiencing a downtrend, with recent support around $632 and resistance around $644. The RSI has consistently been below 50, indicating a bearish momentum, and recently dipped into oversold territory below 33.4. Considering the forecast prices, which continue to decline, I recommend a short selling strategy. We will enter a short position at $638, placing a stop-loss at $644, just above the recent resistance. The initial target price will be $620, aligning with the lower end of the forecasted range. This strategy leverages the downward trend and oversold RSI, while the stop-loss protects against a potential reversal. To refine the strategy, we'll incorporate Bollinger Bands. The price is currently near the bottom band, suggesting a potential bounce. However, the downtrend is stronger. Therefore, we'll adjust the target price to $623, slightly above the forecast low. If the price touches the bottom Bollinger Band and shows signs of rebounding, we can consider a partial profit taking at $630. This combined strategy balances the bearish momentum with potential short-term reversals, maximizing profit while managing risk. The portfolio will prioritize the short-selling strategy with adjustments based on Bollinger Band signals. Based on the historical data and forecast, Solana exhibits a clear downtrend, supported by the declining RSI values and the recent price action. The price has been testing the support level of $131, and the forecast predicts further declines. We'll implement a short-selling strategy, capitalizing on this trend. Entry price will be $138, coinciding with the beginning of the forecast period. A stop-loss will be set at $141 to mitigate potential losses if the price reverses unexpectedly. The initial target price will be $133, aligning with the forecast for June 27, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading below the lower band, reinforcing the downtrend. If the price approaches the $133 target, we will evaluate the RSI. If the RSI is approaching 20, we will set a second target price of $132. The RSI indicates a potential oversold condition, which might signal a temporary bounce. However, the overall trend remains bearish, and we will maintain the short position with the stop-loss at $141. This portfolio combines trend analysis, forecast data, and technical indicators for a robust and potentially high-return investment. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuating within a defined range. The RSI consistently hovers around 50, indicating a neutral to slightly bullish momentum. The Bollinger Bands suggest periods of volatility and consolidation. Considering these factors, I recommend a combined strategy focusing on short-term gains with defined risk management. First, we will implement a strategy based on the RSI indicator. When the RSI falls below 40, which indicates an oversold condition, we will enter a long position. For example, if the RSI drops to 41.1 on June 23, 2025, we will enter a long position at $0.264. The stop-loss will be set at $0.261, just below the lower Bollinger Band, to protect against potential downside. The target price will be $0.275, aligning with the recent resistance level. Next, we will implement a strategy based on the Bollinger Bands. When the price touches the lower Bollinger Band, we will enter a long position. For example, if the price touches the lower Bollinger Band on June 10, 2025, which is $0.261, we will enter a long position at $0.261. The stop-loss will be set at $0.258, just below the lower Bollinger Band, to protect against potential downside. The target price will be $0.289, aligning with the recent upper Bollinger Band. Combining these two strategies, we will prioritize the RSI strategy when the RSI is below 40 and the Bollinger Band strategy when the price touches the lower Bollinger Band. This combined approach aims to capitalize on short-term price movements while maintaining a disciplined risk management framework. Based on the historical data and forecast, Dogecoin demonstrates a clear downtrend. The price has been consistently declining from $0.199 to $0.146, with the RSI consistently below 50, indicating a bearish momentum. The support price remains steady at $0.151, while the resistance fluctuates but generally remains below the current price. The Bollinger Bands show that the price is trading within the lower band, further confirming the downtrend. Considering these factors, I recommend a short-selling strategy. My recommended strategy is to initiate a short position at $0.16. Given the bearish trend and the RSI hovering around the oversold territory, the potential for further decline is significant. A stop loss should be placed at $0.164, just above the lower Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price should be $0.151, aligning with the established support level. If the price breaks through the support level, a second target price of $0.146 can be considered, based on the forecast data. This strategy combines trend analysis, RSI signals, and Bollinger Band support to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano has been in a downtrend, with consistently lower closing prices and a forecast indicating further decline. The RSI consistently remains below 50, often dipping into oversold territory below 30, suggesting a weakening momentum. The Bollinger Bands show that the price is nearing the lower band, which indicates a potential for a bounce or continued downward movement. Given this analysis, I recommend a contrarian strategy focused on shorting Cardano. The entry price should be set at $0.536, coinciding with the forecast price on June 29, 2025. A stop loss should be placed at $0.538, just above the lower Bollinger Band to avoid false signals. The target price should be $0.526, aligning with the forecast for June 30, 2025. To refine this strategy, we'll incorporate an RSI-based filter. If the RSI reaches 30 or below, indicating an oversold condition, we'll initiate a short position. However, if the RSI rises above 50, we'll exit the position to avoid being caught in a potential reversal. The portfolio will prioritize the shorting strategy, adjusting the entry price, stop loss, and target based on the daily RSI and Bollinger Band readings. This approach aims to capitalize on short-term downward movements while mitigating risk through strategic stop-loss placement and RSI-driven exit signals. Based on the historical data and forecast, SUI demonstrates a declining trend, nearing its support level of $2.45. The RSI consistently remains below 50, with recent values hovering around the oversold territory below 30, indicating potential for a short-term bounce. The Bollinger Bands show that the price is approaching the lower band, suggesting possible mean reversion. Therefore, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $2.47, placing a stop-loss order at $2.45 to mitigate potential losses if the price continues to decline. The initial target price will be set at $2.83, aligning with the recent resistance level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI rises above 30, confirming a potential oversold rebound, and the price touches the lower Bollinger Band, it's a strong signal to enter. We'll adjust the target price to $2.68, based on the forecast for June 24, 2025. This combined approach leverages both momentum and volatility indicators for a more informed trading decision, aiming for a quick profit while managing risk effectively. The portfolio is weighted 60% to the combined RSI and Bollinger Band strategy, and 40% to the contrarian strategy. Based on the historical data and forecast, Bitcoin Cash exhibits a generally upward trend, consistently testing and occasionally breaching the resistance level of $465. The RSI fluctuates, but remains mostly above 50, indicating a bullish sentiment. The Bollinger Bands show the price recently moving towards the upper band, suggesting a potential for further upside. Considering these factors, I recommend a long-term investment strategy with a focus on capitalizing on the upward momentum. Specifically, I suggest entering a long position at $468, placing a stop-loss at $455 to mitigate potential downside risk, and setting an initial target price of $497, aligning with the recent high. To refine this strategy, I will incorporate the RSI and Bollinger Bands indicators. When the RSI dips below 20, oversold, it signals a potential buying opportunity. Conversely, when the RSI reaches 80, overbought, it suggests a possible price correction. Furthermore, if the price touches the lower Bollinger Band, it could be a strong indication of an oversold condition, reinforcing a buy signal. Given the forecast for the next week, I recommend holding the long position and re-evaluating the strategy at the end of the forecast period. This approach balances the upward trend with technical indicators, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Jupiter demonstrates a downtrend, consistently testing the support level of $0.396. The RSI indicates that the asset is currently oversold, fluctuating below the 35 level, which suggests a potential for a short-term bounce. However, the forecast prices for the next week predict a continued downward trajectory, reaching as low as $0.348. Considering these factors, I recommend a contrarian strategy with a short position. Enter a short position at $0.405, placing a stop-loss order just above the recent high of $0.43 to limit potential losses. The target price for this short position should be $0.359, aligning with the forecast low and providing a reasonable profit margin. To further refine the strategy, utilize the Bollinger Bands. If the price touches the lower band of $0.345, it could indicate a strong selling pressure, triggering an exit from the short position. Conversely, if the price approaches the middle band of $0.436, it might signal a potential reversal, prompting a partial profit booking or a stop-loss adjustment. This combined RSI and Bollinger Bands approach aims to maximize returns while managing risk effectively in this volatile market. Based on the historical data and forecast, Pudgy Penguins demonstrates a clear downtrend. The price has been consistently declining from $0.0123 to $0.00864, and the forecast data projects a continuation of this downward movement. The RSI consistently remains below 70, indicating that the asset is not overbought. The Bollinger Bands have been widening, suggesting increased volatility, but the price is consistently near the lower band, reinforcing the bearish trend. Therefore, I recommend a short position strategy. We will enter a short position at $0.00941, with a stop-loss placed at $0.00983, just above the recent high. The target price will be $0.00869, aligning with the forecast and providing a reasonable profit margin. To optimize returns, I propose a portfolio combining technical indicators. Initially, we'll implement a short position at $0.00941 with a stop-loss at $0.00983 and a target price of $0.00869, based on the forecast and RSI. If the RSI dips below 30, oversold, indicating a potential bounce, we will partially close the position. If the price touches the support level of $0.00923, we will tighten the stop-loss to $0.00933 to protect profits. This combined strategy leverages both trend analysis and reactive adjustments to maximize potential gains while minimizing risk. Based on the historical data and forecast, JasmyCoin exhibits a downtrend, supported by consistently declining prices and the RSI consistently below 50, indicating weakening momentum. The recent RSI values have been trending towards oversold territory, nearing 20. Considering the support price of $0.0124, I recommend a contrarian long position strategy. The entry price should be $0.0111, coinciding with the lowest forecast price and the potential for a bounce. A stop-loss should be placed slightly below the support level at $0.011 to mitigate potential losses if the downtrend continues. The target price should be set at $0.0129, aligning with the resistance level, aiming to capture a potential rebound. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests potential for a mean reversion. The strategy will be a combination of the RSI and Bollinger Band signals. If the RSI falls below 20, and the price touches the lower Bollinger Band, then enter a long position at $0.0111. Set a stop-loss at $0.011. The target price will be $0.0129. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance has been experiencing a significant downtrend, with the price fluctuating between a support level of $0.654 and a resistance level of $0.718. The RSI indicates oversold conditions, with values consistently below 50, and dipping as low as 34.0. The Bollinger Bands show that the price has been trading below the moving average, suggesting a bearish momentum. Considering this, I recommend a short selling strategy. We will enter a short position at $0.65, placing a stop-loss order at $0.67 to protect against a potential reversal. The initial target price will be $0.62, aiming to capitalize on the ongoing downtrend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI rises above 60, indicating an overbought condition, we will close the position and reevaluate. Conversely, if the price touches the bottom of the Bollinger Bands at $0.603, it signals a potential bounce, and we will adjust the target price to $0.60. This dynamic approach allows us to adapt to changing market conditions and maximize returns while minimizing risk. The final portfolio will be 70% short selling and 30% waiting for a rebound. Based on the historical data and forecast, reserve rights shows a downtrend. The price has been consistently declining from June 10th to June 23rd, and the forecast for June 24th to June 30th predicts further decline. The RSI consistently remains below 50, indicating a bearish momentum. The price is approaching the support level of $0.00624. The lower Bollinger Band suggests that the price is likely to continue its downward trajectory. Therefore, I recommend a short position strategy. Entry price should be $0.00603, with a stop-loss set at $0.0065. The initial target price should be $0.0055. To maximize returns, I suggest a tiered target strategy. After reaching the first target of $0.0055, we can move the stop-loss to the entry price of $0.00603 to lock in profits. If the price continues to decline, the second target price should be $0.00549. This strategy combines the trend analysis, RSI signals, and Bollinger Bands to provide a high-probability trading opportunity. The combination of these three strategies will provide the most efficient portfolio. Based on the historical data and forecast, Sonic shows a downtrend, particularly evident in the recent days with consistently lower closing prices and a forecast indicating further decline. The RSI consistently remains below 50, often dipping into oversold territory, below 30, suggesting potential buying opportunities. However, the forecast price for the next week is consistently below $0.26, and the Bollinger Bands are contracting, indicating increased volatility and potential for a sharp move. Considering this, I propose a contrarian strategy focused on short-term gains during brief upward bounces. My strategy involves a series of short positions. We will enter a short position at $0.274. The stop-loss will be set at $0.287 to limit potential losses if the price unexpectedly rises. The initial target price will be $0.254, capitalizing on the predicted downward trend. If the price reaches $0.254, we will move the stop-loss to the entry price of $0.274 and set a new target price at $0.253 to secure additional profit. This approach aims to capitalize on the expected downward momentum while managing risk with carefully placed stop-loss orders. Based on the historical data and forecast, Dogwifhat shows a downtrend with significant volatility. The RSI consistently hovers below 50, indicating a weakening momentum. The forecast prices continue this downward trajectory, suggesting further declines. We will implement a short selling strategy leveraging the RSI and Bollinger Bands. Our entry price will be $0.792 on June 24, 2025, when the price is near the forecast low and the RSI is relatively low. We will set a stop-loss at $0.826, just above the support level, to limit potential losses if the price unexpectedly rebounds. The target price will be $0.752, aligning with the forecast price and providing a reasonable profit margin. To further refine the strategy, we will incorporate the Bollinger Bands. The price is currently trading near the lower band, which suggests a potential bounce. However, the forecast indicates continued downward pressure. Therefore, we will maintain a conservative approach. If the price touches the lower Bollinger Band and shows signs of rejection, we might consider covering our short position early. The overall portfolio allocation will be 20% of the total capital dedicated to this trade, managing risk and maximizing potential returns. This strategy combines technical indicators with forecast data to capitalize on the current downtrend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, SEI demonstrates a volatile trend with recent upward momentum. The RSI consistently dips below 40, indicating oversold conditions, and occasionally touches the overbought zone above 60. The Bollinger Bands show price fluctuations within a range, with the current price nearing the upper band, suggesting a potential for a short-term correction. Considering these factors, I propose a combined strategy incorporating RSI and Bollinger Bands. We will implement a buy strategy when the RSI falls below 35 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, I recommend entering a long position at $0.181 when the RSI is 36.7 and the price touches the lower Bollinger Band of $0.166. Place a stop-loss order at $0.157, just below the lower Bollinger Band, to mitigate potential losses if the downtrend continues. Set a target price at $0.231, aligning with the forecast price and the upper Bollinger Band. This strategy balances the risk of a downward correction with the potential for profit from a rebound, offering a high return opportunity with carefully managed risk. Based on the historical data and forecast, Virtual's protocol shows a clear downtrend. The price has consistently tested and failed to break through the $1.7 resistance, while approaching the $1.37 support level. The RSI is largely below 50, indicating bearish momentum, and has been consistently below the 80 overbought level. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential for a continued downward trend. Considering these factors, I recommend a short position strategy. We will enter a short position at $1.6, placing a stop-loss order at $1.51 to protect against a sudden reversal. The initial target price is $1.55, aiming to capitalize on the immediate downward pressure. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider covering the short position and potentially looking for a long entry. Conversely, if the price touches the lower band of the Bollinger Bands, it may signal a potential bounce, prompting a reassessment of the short position. The final target price will be $1.37, aligning with the established support level. This tiered approach allows for adaptability and risk management, maximizing potential returns while minimizing losses. Based on the historical data and forecast, movement shows a downtrend with increased volatility. The RSI indicates oversold conditions, particularly on June 23, 2025, with a reading of 30.0. The Bollinger Bands also suggest potential for a rebound, with the price nearing the lower band. My strategy will focus on capitalizing on potential short-term reversals. I recommend a long position with an entry price of $0.131. Given the recent price action and support level at $0.152, a stop-loss should be set at $0.127. The initial target price is $0.151, aligning with the resistance level and forecast price on June 30, 2025. To refine the strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI moves above 50, consider adjusting the target price to $0.166, based on the historical high. Conversely, if the price breaks below the lower Bollinger Band and the RSI remains below 30, consider exiting the position or tightening the stop-loss to $0.124 to minimize potential losses. This dynamic approach allows for adaptation to changing market conditions, maximizing potential returns while managing risk effectively.